Hey traders, let's take a look at these charts here. Let's start with the tension indicator. I want to back up just a little bit in this video and go real quickly over this week so you can see how that Friday was sort of motivated by a poorly structured week. Right here you can see we had our bearish trend and it ended on Tuesday. You can see Tuesday here, right there. When tension crossed over zero, it let us all know that the trend had ended, and we started to look for the next trend to develop, and you could see that it just wasn't able to really establish anything before it toppled over. So we had these very short trends attempt to develop that folded over. Again, we had another one here, it folded over, and then you can see on Friday we had some bearishness here as tension tested the zero but sold it back off, and then again it came back up to test that again, and the market sort of sold off a little bit and rebounded after the market closed. So what we're seeing here all this whole week is just an inability to really establish a trend. So we're closing with some bearishness coming in but then immediately crossing over, and we are in a ranging mindset. So with that ranging mindset in your mind, if you're going to trade on Monday, remember that things as they break, they're going to have a hard time continuing. So you're going to want to take your profits. Don't expect 2-3 legs out of moves unless something can really come in and boost the market. Ranging mindset means the market is naturally going to have a lot of mean reversion. Don't turn your winners into losers trying to hold on Monday for a trend that hasn't set up yet. Wait for it to set up and then trade it. You're going to have a lot more success doing that. I want to show you Friday now. Let's take a look at Friday, and then I'll show you the trades that I thought were useful on Friday, the best trade that I saw, and then we'll talk about Monday, what's coming up Monday, and what to expect from that. So you could see that this was where the bearishness showed up. Momentum push positive, that's a bullish idea. So bulls were going, oh, this is a great idea, I'm going to buy. And the market sold that off. And that is a trending type of thing to do. When you can bring an idea in the market and just essentially use it as liquidity, that's a trending thing to do. So the next time that happened, you can see, was right here as it momentum moved down. Decay was testing zero. And you remember, decay is that hidden energy that you just can't see without the decay indicator that pumps energy into momentum. So as it came down and started to test going negative, that's hinting that it's going to start pumping negative energy into momentum, and that's a bearish idea. So you could see that the market bought that up, and again we had both of these come down, and this got down to like -15 here. It was about 1% here, -1% here, and then the market bought that back up. So we're seeing 2 times bullishness. That's a little bit more bullish than it was bearish earlier, right? So the best entry that I saw in taking advantage of this is we have a pivot right here where that you have a low on decay that's a little bit longer than just a minute or two, and it came back and did what I call the wide short. It's just the words that I tend to use when I describe this, where it retests it, sort of the wide retest, and then it gives us a short little, or a quick is what I should call it, a quick retest. And this was the best place to get in. It would be that's a decay retest. And again, we had another decay retest right here. I took the first one, I didn't take the second one. And my reason for that was that you could see how the week was developing. I was very unmotivated, not to not trade, but when I have the feeling that large participants are not trading, going into Friday, we have a holiday next week. You could see the way the market was behaving. I was thinking to myself, I don't think people are going to want to participate in this, and I'll bet most people have gone home. So I was operating under the assumption that the market wouldn't be doing a whole lot. And it ended up actually moving up pretty well after the second decay retest and that second bout of bullishness that we saw. It moved up a little bit more strongly than I expected, but I was watching and trying to walk people through the markets into the close, but I didn't participate that second half. So what's going to happen on Monday? Let's talk about what you need to expect. Monday, this is a very important number right here. Tension. We have near zero. And if you've been following my videos, you know what this means. It means that the advanced decline is going to have more power when you have near zero. The advanced decline's little tiny moves are going to drag things around. And if you were watching Friday morning, you know what that felt like. These 200 tick moves on the advanced decline were dragging 20-point ranges. And it was just little things would drag price up and down. It was very volatile and difficult if you didn't have good execution. So that's what's going to be happening Monday. Monday morning, advanced decline. Watch the relationship between how price sloshes around and the advanced decline. The other thing that's a little bit more unique than near zero that is important for you to trade from a momentum, or not trade, but pay attention to, is these numbers are all very flat in their respective ranges. If we see prices rally up and we get, plus 50 on the velocity number here, and that's an okay velocity number, what's going to happen is almost immediately it's going to run into this grind where that we have all these other numbers that are very flat. So a lot of mean reversion, a lot of ranging to be expected, especially immediately in the morning on Monday. That's what I'm looking to see Monday. The next thing after, the first hour or two, which is what we just described, the advanced decline, the momentum numbers having a hard time, is we need to be sitting in front of the market. I'm going to be sitting in front of the market and watching how the market develops tension. This is a principle I haven't really talked about a whole lot, but I'm going to mark it down here. How the market develops tension shows how trends will work. So sometimes tension builds in different ways. When the market gets all wound up in one way or the other, the way that happens is going to give you a big hint to the way trends are going to be working over the next 2 or 3 weeks. We're going to get to see the model of development, and the market's going to keep using that model to develop trends in the future. Those models don't tend to change very quickly, so if you can see that development, pick up on how it worked, the things that were going on, you're going to have a really good upper hand on the market, and that's going to give you an edge in picking up on when trends are developing next. So I'm going to be watching that. It's going to cut down on the amount of profits I might be pulling out of trades. I'm going to be expecting a lot smaller, so I'll be in and out, a lot scalpier. But that information is going to be invaluable over the next couple of weeks for me to have in the back of my mind when I'm trading. So I hope this was useful in kind of walking over the trades since it's Friday. Well, it's Saturday by the time I have this posted. So hopefully you guys have a little bit extra time to listen to me ramble on about a few things in the market. If you have any questions, shoot me a message. And as always, good luck trading.